Good afternoon, everyone, and welcome to this week's episode of a Junior VC Behind the Scenes. I'm your host, Mazen, and this week I have with me Rajiv and Chandra as we talk about this week's piece. So to get us started, Rajiv, can you tell us, tell our audience why we chose to talk about ElasticRun this week?
Sure. So I think a couple of reasons. The first is obviously the numbers. I mean, the company crossed 1,000 crores of revenue, raised 300 million, turned unicorn recently this year. But I think more importantly, something has to recognize is that, they've been building silently for the last many years, right? They started in 2016, came out of stealth mode in 2016, and they've been making inroads into the rural landscape in India since then, right? I think we talk a lot about 10-minute delivery, grocery, and the grofers and the big baskets of the world, Reliance entering the space, which is extremely urban focused, right? What is very interesting about ElasticRun is that they've been building the grocery and the logistics business in rural India, right? A market that's usually untouched by current unicorns, by what you hear and see in the news every day. So I thought it was an important topic for us to kind of understand their business as well and how they've built it out and gain a lot of insights from that.
Certainly was a really interesting story. So let's jump right into it, Rajiv. Can you tell us how they got started in 2015?
Right. So, I mean, the founding team coming together was kind of, the dream team. They had experience working, building logistics software in companies like Infosys, DHL, and Sandeep Deshmukh, the founder, worked in Amazon. Also building, the transportation logistics network in Amazon ground up. So they had the right ingredients for the experience, right? And interestingly, Sandeep grew up in a farming family in Maharashtra's remote village, where he saw that the big brand FMCG companies had kind of neglected the quiet corners of rural India when it came to distribution, right? They were very urban focused. Most of their logistics, distribution, warehouse centers catered to urban markets. So that's where the idea kind of germinated for them. And while building the transportation network in Amazon, he realized how difficult it is to distribute to rural India. And I think since 2015, when they came together, started discussing the problem a little bit more, some solutions started becoming apparent to them. And they could, combine both their experience in the technology sector and also transportation to kind of, start building a solution to this problem. And I think this problem is massive. It's painstaking, but it's something that everyone lives with, right? The FMCG and the e-commerce companies just live with it. Everyone else, the end consumers and the Kirana stores live with it, and no one's kind of picked it up and solved it yet. So that's where they saw this huge gap in the market.
And why was it the right time? Like, why was it the right time for them to take up this problem?
Yeah, that's interesting because, 2015-16 was when India was seeing kind of mobile phone and internet penetration. Without the internet, the mobile phone and the penetration, this was impossible, right? Because this is a technology solution. So what Sandeep kind of saw was a problem on one hand, and also, this rapidly evolving technology acceptance and penetration on the other. So yes, the time was right. They kind of picked on that, and once they knew, they could test their thesis on a small scale with a few companies, then they were kind of good to go.
Let's dive into that a bit more. How did they get their first few customers in the early traction? How did they build out the team and find product market fit?
Right. So interestingly, initially they started off as solving for the middle and last mile for e-commerce companies and a couple of FMCG brands, right? So if you look at the problem more closely, right? So any kind of distribution for an e-commerce company or a big FMCG brand requires heavy asset investment. You have to set up a warehouse, you have to set up your middle mile stockist, you have to have trucks, personnel manning these warehouses, and you have your end Kirana stores, right? It's a massive investment. And rural India is typically characterized by small ticket items, which are transported over very long distances. And to justify your capital investment, you need to move very high volumes, right? Which doesn't happen in rural India. The supply is erratic, and most of these brands ignore these areas and concentrate on the urban centers. So what they did was, they pitched to some of the e-commerce companies and also one of the FMCG brands that they would build out this network for them by using existing assets that already existed on the ground. uh, and what I mean by that is you already have a warehouse that's transporting some kind of goods that has space for sorting, packing. You have some trucks that are running empty. In fact, the average truck utilization in India is like close to 40%, right? And you have kirana stores that always have extra space and some manpower to help you distribute. So they kind of stitched all of these together, and they pitched to these companies that, what, we'll help you penetrate these far-flung areas. And these are customers that are untouched for these guys, right? They've never sold to these customers. They don't know about these customers. And in terms of numbers, we're talking about a long tail of close to 7.5, 8 million kirana stores, right? So that was a very exciting proposition for these companies to come on board. And it took them close to 18 months to build out the first kind of proof of concept for one of the companies that they started working with. But once that was proven, it was quite defensible, right? So kind of stitching together very fragmented assets with a tech solution was a great proposition to have for companies.
Can you tell us a bit more about their product and their service offering? How they kind of built on top of that
Right.
network that they stitched together?
Right. I think even the founders kind of describe this as, and if and what we have also described it as, is building a railroad initially, right? So the initial railroad is this stitching together of different assets, right? And of course, the backbone is the technology that works. So how the product works is that you have fragmented assets. These fragmented assets are warehouses, trucks, stockists, wherever you find empty space, poor utilization, you kind of get this capacity available on the cloud, right? You know what is empty at what time, where, which truck can transport, right? So what you're doing is you're kind of emulating a physical network on the cloud, and they call this a virtual network, right? And this network can kind of be stitched up based on the capacity that you require. If you don't require that capacity, you don't have to use it. It stays as it is. So the initial railroad was kind of building that network, and once you've proved that you can transport goods on that network, you can stitch up assets whenever you require it. What you're building is like a variable capacity network. You don't have fixed capex which you have to use with high volumes and sweat the asset over months to prove it's efficient. You can stitch it up whenever you want. And once you build that initial railroad, you can build layers on top of it, right? Like they built an analytics layer. You can like gain insights of your end customer, the kirana stores that transport, of the trucks that move, and all of that. And the second layer, most obviously becomes credit, right? When you're delivering to far-flung areas, there's always the working capital problem, the credit line problem. So you build the credit layer, and then you increase transactions on top of that. And once you've built these layers, then you pitch to more customers, more companies, more e-commerce. And that's how they branched out from the initial FMCG e-commerce to then pharma, to automotive, to food sectors, and things like that. So it was a journey of kind of building a framework first and then developing layers on top of it.
It's quite an interesting theme that I think we've seen in a lot of these B2B platforms, where you sort of have these network effects. As these platforms grow, they become a lot more valuable. But can we talk a bit about the unit economics and how ElasticRun actually makes money, Rajiv?
Sure. So two main revenue streams. I mean, at least going by their reported numbers. So the larger part is the trade of wholesale goods, right? Now, if you are servicing extremely far-flung areas, so what you do is you buy these goods, you have a network that you've stitched up, and you can sell, to these far-flung kirana stores. Now, it's very important to make a distinction between the urban retail and the rural retail, right? Now, in urban retail, you're always undercutting your competitor. the winner in the market is the one who's giving the best price, the best deal, the best, time to delivery, and that's the game, right? But in rural, the game is availability and cost. That's about it. So you have to have the item at least available when the kirana store needs it, right? And the cost of service, and the second aspect is the cost of service. You can't give it to the kirana person at a very exorbitant cost, then they're not going to buy it from you. So they cracked the latter. Given their network, they were able to deliver items that the kirana guys had never seen before, right? Automotive spare parts, FMCG products they'd never seen before. And that, I think, was a revenue generator for them. And the second part was lending this distribution network to bigger pharma and FMCG companies, again giving them access. And second is giving them insights from from these markets that they had not, that were kind of untouched until now. So wholesale trade of goods and revenue on freight and freight distribution and logistics, these were the two main revenue drivers for them. Very interestingly, their financial statements also speak that they were able to deliver this at cost, which means they're not losing money on delivery. Their cost of delivery exactly kind of matches their revenue on delivery services. And an important, again, the fiscal FY 2021 were great years for them because in a pandemic laden year, forget normal times, there's huge sourcing and supply disruption, right? So given this time, they were able to use these networks that they had built over the last 3 to 4 years to kind of bring goods to these areas where nobody else was able to do that. So I think that really improved their revenue 2 to 3 times in the span of that fiscal, because it was pandemic laden and they were able to solve the sourcing challenge. I think Chandra can add more to the financial aspect.
Thanks, Rajiv. Yeah, Chandra, would love to get your insights on how they built on the solid base and grew the company.
Yeah, sure. Thanks, Rajiv. Okay, Margin. So if you look at the revenue that they've reported, as Rajiv pointed out, it jumped 2.14 times to around 1,000 crores in the 2021 financial year. And that's a lot of money, right? And currently they aggregate supply from over 400 FMCG brands and offer their logistics services to about 80,000 villages across 26 states. And very interestingly, it's one of the rare unicorns right now that's showing fiscal discipline, right? Now today, everybody's spending money like crazy. Everybody's buying like BMW bikes for their engineers. But here, ElasticRun is going to turn profitable soon, and it's almost hit a break-even point. It's spending about 1.1 rupees to earn 1 rupee of operating revenue, which is kind of really notable, right? And another interesting thing is how, when you look, so we've gotten a fairly detailed expense breakdown visualization in the article. But if you look at it here, the share of revenue between the wholesale trade and services has changed. In 2020, they were getting half of their revenue from just the wholesale trade, and now it's gone to nearly 80%, right? And and that's the one that really grows. So as you get more customers, as you're selling more goods, that's what's expected to grow faster than your other revenue sources. And what's really interesting when you look at it, finances again, is that the majority of its expenses are in the procurement of FMCG goods, as opposed to, say, their salaries, as opposed to other overhead expenses. And so we anticipate that this proportion is going to rise because there's significant wholesale and retail food inflation happening right now. And there's a global commodity price spike due to the ongoing crisis in Ukraine. But if you look at their other expenses, their second highest expense is essentially just distribution and logistics. And that's just 20%. The process of actually getting your goods to the last mile, right? And again, we see that's probably going to go down in the future because if you see our recent budget, the government is pushing to spend for increased infrastructure spending. And as infrastructure improves, the cost of moving goods around is going to decrease. So as ElasticRun is going to keep on scaling this year and in the future, we think that it's going to depend more on being able to operate their complex logistic network than anything else.
It really is an interesting story. But can we take a step back and maybe look a bit at the competitive landscape and
sure.
who exactly are their competitors?
So the thing is that, So in economics, there is this very funny phrase that a lot of people say, right? So an economist was walking on the road and he sees a $20 bill on the ground. And then somebody asks him, why didn't you pick it up? And he said, if it was real, someone would have picked it up already, right? Similarly, if you're going to tackle any large market with a solution that works, other people will see that it works and you won't be alone for too long, right? So we kind of looked at the landscape and we kind of analyzed it and we saw two axes on which a threat could happen, right? So one is what if players target our kirana stores and what if consumer behavior changes? So it's like a 2x2 matrix. So how did that work really, right? Right now, ElasticRun's carved out a niche for itself that, you know what, there are kirana stores in rural areas, nobody's servicing them, so we're going to own that. But there's an 800-pound gorilla lurking in the background and it's called Udaan, right? And Udaan's India's biggest B2B e-commerce platform by far. Okay, it's shipped over 260 million products across 1,000 towns and cities. It's got over 5 lakh new retailers in 2021 alone. Now, right now, ElasticRun seems to be counting on Udaan to just ignore the rural area, but Udaan has an enormous tech infrastructure. It's got a really formidable sales presence. So it's only a matter of time before Udaan also starts dipping its toes into these waters. And another dark horse we think is Dehat. And we talked about Dehat a couple of weeks ago, again in our ajvc essays, right? Which is a very similar last mile B2B Kirana focused model. But the focus of Dehat is more on agricultural inputs and sourcing agricultural output like crops and so on for institutional buyers. There's nothing stopping them from expanding to consumer good side of things as well. But what we think about is also another issue that could come up is changing consumer habits, right? So over the last year, we've seen so many players. We've seen DealShare, we've seen JioMart, we've seen Meesho. And what are they trying to do? They're trying to get rural customers used to getting groceries delivered directly to their houses, which means that you're bypassing the Kirana store altogether. So how well does a Kirana store-based business model hold up if you're going to stop buying from Kiranas at all, right? So that's one thing to think about. And the last issue we're thinking about is that basically the increasing urbanization of India itself. So one trend we've seen is people leaving villages for booming towns and cities. So most of the urban areas that were identified in our 2011 census have expanded a lot, right? And thousands of villages have turned into towns. And how the census defines a town is where 75% of the population is not engaged in agriculture. And so essentially what this means is there are smaller populations in rural areas, and therefore the TAM or total accessible market for a company like ElasticRun is also going to be smaller, right? So the way we see it is ElasticRun today sits at a crossroad. And right now you've got a massive opportunity, and you've also got some existential threats from the competition and consumer trends. But we're really bullish. The company's historical performance has been insane. Their ability to execute has been amazing. And we're really kind of excited to see them laying the tracks for Indian B2B e-commerce in the years to come.
Thank you so much, Chandra. If you can maybe help us to sum it up and tell us, where they are today in terms of fundraising and the future definitely sounds bright, and you summarize it.
So in the beginning of February, ElasticRun just raised $300 million in a round led by Tiger Global, by SoftBank and Goldman Sachs, and they've now become a unicorn. And that $300 million is a lot of money. And they plan to use almost all of it in expanding further into rural areas and reaching more underserved customers. So they seem to be in a fantastic position right now.
They're betting on the Kinara model lasting, and
exactly.
Certainly sounds like they have a bright future ahead of them. Thank you so much, Chandra, Rajiv. I really enjoyed the episode, and thank you everyone for tuning in.
Thank you.
Thank you.